Good evening, Don Smith here, February 26, 2016. We're going to take a look at a couple of indicators tonight. We're going to look at the VIX, or the VXX more specifically, and this is an index that it's the implied volatility, meaning it's a reflection of the amount of positioning that investors are taking against their positions. In other words, if they're buying puts to protect or calls to participate in a complacent move in the market. Basically a fear gauge. So we have the VIX that sold off now from 31 down to 24, or the VXX, sorry, and it's now in somewhat of a bearish mode. And this tells us that the equity markets will continue to move up for this near future move, probably only a few weeks. What we do note here is that we have not had the capitulation shown in the VIX that is required for a true bottom in the market. We've had a major level tested, which was the late summer low, and it just fell shy there, and then it bounced from there. So we're in a recovery mode here short term. But the VIX has not displayed the level of fear that it would take to mark a true bottom. So we have a trading bottom in place, but not a real bottom. I do believe that we're in a secular bear market here, and I do believe that we will not bottom until sometime in 2018. So let's have a look at Apple here. Apple has been building a base down here at this level, and it may, quite shortly, I believe it should take out some of these highs here and start to trade in between this range. And I wouldn't be surprised to see it up at 112 area before this move is over. And we could also look at GDX, which is the gold index. And this one now is starting to look a little tired. The bulls are looking a little tired here. We had a high level here at 20.5. A few days ago, Wednesday. That was the day that we sold all our positions in gold. And Thursday and Friday it has made lower highs and lower lows. And we've also had a pretty smart pickup in volume. So I think the GDX could easily fall down to this 16 level before it finds major support here, and that could develop over the next 4 to 5 weeks, maybe less. But that's the level to watch out for, is as this 50-day moves up over the 200-day, at that point we'll probably be up somewhere around the 16.5 level. So that's the level where I see where we're going to find some support, and that'll correspond with probably 1135 to 1160 gold. I think is going to be the area that it's going to fall into as it corrects here. We could look at ABX Toronto. ABX Toronto has not really traded down aggressively just yet, but I believe it will. We've had 3 days here. The last 2 days are lower highs and lower lows. We had a small drop, net close of only 10 cents on Friday. That could be viewed as bullish. However, you have to look at where it did trade in the morning. It was down quite a bit lower. It was down 1765, and it did not take out the previous day's high. So there's no outside day or anything there to suggest that it's moving out of the trading range. So it's a bit of a down channel here, and I do think it's going to drop down. I think you're going to be able to pick Barrick up around $14.50, $15. And then we can look at Goldcorp. They came out with a very disappointing report, and stock got hammered. At some point, Goldcorp's going to be a good buy. I hope it gets deeply oversold here. It probably will, with this type of downward momentum. It has some more downside, but I do think that these support levels in here will hold, and you would certainly be wise to pick some up if it gets down between $15 and $16, because Goldcorp still has a great balance sheet, and they're still a fine company. They just had some short-term issues. Now we could look at Yamana Gold just to get a little cross section of some of the smaller cap guys as well. Same thing. You have looking a little tired up here. You have 3 days. It closed a bit lower on Friday, being the weekend as well. And you have the MACD converging over here. So it wouldn't surprise me to see a nice little pullback here. I mean, these things are notoriously volatile, and when the sellers come in, they can push them down quite violently. So you have to bear that in mind, and it really depends on your time frame. If you're an investor and you just want to buy and hold on to them for this longer term move in gold, which could take anywhere from 1.5 to 2 years to play out, then I wouldn't even worry about it. But if you're a swing trader like I am, then you want to be looking for a better opportunity to buy. And that's exactly what we're doing. So that wraps it up for tonight. Thank you for listening, and we'll reconvene on Wednesday, March the 2nd. Thank you.